I suppose, but we still have 4 distinguished speakers from different institutions, organizations, and I think it's a very good mix from international financial institution, from monetary policy community, from a think tank, and also from a foreign investor. And they will definitely give us a rich overview of issues linked to Euro introduction. So we have, first of all, Mr. Mahmood Pradhan here to my left, who is a Deputy Director of the European Department of International Monetary Fund. We also have Mr. Ilmārs Rimšēvičs, who is the Governor of the Central Bank of Latvia. We have Mr. Guntram B, who is Director of think tank Bruegel, one of the most active and visible think tanks in Brussels, working on European Union and Eurozone issues. And we have Mr. Timothy Keane from Western Union, who is CEO at Western Union Payment Services Ireland. So, as I said, very good mix of representatives from different organizations, and I would like to have the final announcement for the audience before we start the discussion, that there is a possibility to ask questions to our panelists. We have microphones, so during the first round of interaction, please think if you have any questions, and I will give this opportunity to interact so that it is a more interactive discussion. So I would like to start with our neighbors, with Mr. Rimšēvičs. From next year, when Lithuania joins the Eurozone, common currency will be one more thing that will be common to all 3 Baltic states. We have many common things. Now we will also have a common currency, I think for the first time in our history, except for some period of the history when we did have it involuntarily. So there are common things. There are also friendly competitions going on, usually between all 3 Baltic states as well. And if we look into the debate about the euro, attracting foreign direct investment is one of the advantages which is usually mentioned, and of course each country tries to outperform the others in this respect. So taking cooperation and competition dynamics into account, I wonder, what would you say, how important is the euro for all 3 Baltic states as a region, and what's your view, looking from Latvian perspective, about Lithuania joining the other 2 Baltic states in this respect?
Thank you very much for the very kind words, and good morning, ladies and gentlemen. This is indeed my pleasure to be here in Vilnius today. I remember just a year ago we had the same ceremony in Riga, and I still remember how important it was for Latvia, and I know how important it is today for Lithuania. And coming here yesterday, I was remembering how just 25 years ago, in 1989, there were already the first discussions among the 3 prime ministers of the Baltic states. Can we organize something together? Can we do something more coordinated? There was discussions about common Baltic currency. Unfortunately, there were ambitions from the 3 different countries. Everybody was thinking that they are unique, and it was difficult to agree. Only now, 25 years later, We are united through the Europe, as you mentioned, through the voluntary decisions to really integrate more in European structures. I think for Latvia, and for myself, I believe it's very, very important that we having only 98 days remaining to the introduction of euro in this country, because really Lithuania is the largest Latvia's trading partner, and it would definitely facilitate the trade among our countries as well. Speaking about three Baltic countries together, I believe we will be finally realizing ourselves what already has been postulated for many, many years, that the world looks at us as the Baltic region, not at the separate three countries. And this will definitely facilitate the trade, facilitate the investment decisions, and this competition amongst ourselves will be definitely not the most important thing. I think we will be competing with much more larger economies, with larger countries. And I think if you look at our positioning, then Finland has around 5.2 million people. Austria has around 8 million. Three Baltic states together, a little bit more than 6 million. So this is already the region where investors will be reckoning with. So therefore, I feel that this is really the big day today, that three Baltic states finally will be integrated through the common currency, and will be really constructing and posing the very competitive environment and much more attractive investment environment for this region as a whole.
Just one follow-up question. Looking back into Latvian experience, what would you say were the things you would do differently? Since we still have 98 days left, maybe you have some lessons for us.
Well, I think your Minister of Finance gave an excellent, everybody gave an excellent speech, but I think he gave a couple points which reminded us about history. And I think, speaking about how would we do things differently, then definitely we would not miss the 2008, which for Lithuania, 2007 was the first try. For Latvia was 2008, and we were not convinced, and we gave it up, and we paid it dearly throughout the crisis of 2009. If we would be in Eurozone enrolled in 2008, I think there's no doubt that we would weather the crisis much more smoother.
Thank you. And I would like now to turn to Mr. Pradhan. IMF is regularly doing health checks of the economy of its members, and we know Article 4 consultations. So if you look into the members of the Eurozone and in this case into Lithuania as a prospective member of the Eurozone, what based on the analysis conducted in the IMF, what would you say are the main pros and cons of being a member of the common currency area for a small open economy like Lithuania?
Thank you. Thank you very much, and good morning, ladies and gentlemen. Like all the others, it's a real pleasure to be here and pleasure to be invited. Let me start by putting this question in slight perspective. Typically, when we think about countries joining a common currency or a single currency and deciding to abide by the rules of that new club, we typically ask a very simple question: which is what is the ability of this country to withstand the rules which are a fixed exchange rate. Now here we're in a very unusual situation, which is, as other speakers have already mentioned this morning, including the Minister of Finance, that Lithuania has lived under a fixed exchange rate system for a very, very long time and very successfully demonstrated that ability to sort of stay within that system. So here we're faced with a very unusual question. It's not typically what we see in other parts of the world where countries decide to fix exchange rates. The issue here is that we see the euro adoption here in Lithuania as really a part of a process that has been going on for a long time, this process of integration within Europe. The exchange rate is part of it, but it's only one part of it. So the benefits, I think, have already been touched on this morning. I would add the benefits of trade integration, the shared sovereignty. I would add to that and perhaps emphasize a point that the governor made this morning, that in a technical sense, being part of the euro area, what's different about that than a fixed exchange rate is the access to the ECB's liquidity facilities. That, we believe, is a very important feature that will protect Lithuania from future financial crises, future vulnerabilities that arise, as you know, all over the world and typically quite perhaps more frequently than we have been used to. I think this access to ECB liquidity guards against financial vulnerability. It will also, as the governor emphasized, reduce borrowing costs across the economy, both for the government and the private sector, and that's a very, very important benefit, I think. You asked also about what are the possible disadvantages. I think I've already touched on the broad aspect, which is that you have to live by the rules of the game. But you have already demonstrated a very, very long period, perhaps longer than many euro area member countries themselves, that you can live in that fixed exchange rate regime. It comes with, that territory comes with making sure that you guard against competitiveness and fiscal prudence. And I think both of these are the things that all policymakers, not only this morning, but in the many discussions we have had with Lithuanian policymakers over the years, we have very well understood this commitment and this resolve. Thank you.
Thank you. I think it was in 2000 when IMF published a paper on using currency board as a regime which might act as a transition regime to the Eurozone. And two factors were emphasized in this paper, prudent fiscal policy and structural reforms. And I think that these arguments proved very important, to be very important, especially when Lithuania was assessed in 2006 in terms of its readiness, or not being ready, actually, to join the Eurozone. Then I have a question to Mr. Wolf. What would you say are now the key prerequisites when Lithuania becomes a member of the Eurozone to be a successful member? You know, not to follow the path of some countries which we now experienced huge difficulties in a kind of hangover when they woke up after a period of cheap money linked to membership in the Eurozone. So what would be your advice to Lithuanian government?
Well, thank you very much, and good morning also from my side. It's a real pleasure to be here, and I want to start by congratulating Lithuania for this big step and for the accession to the Euro. I think it is a wise decision given that Lithuania had already a fixed exchange rate for such a long time. And it certainly shows, as also Mario Draghi has said, that internal adjustment in a fixed exchange rate system is possible. Having said this, the fact that it's possible doesn't mean that it has been the optimal solution. I'm sure that economic historians will debate for a very long time whether it was a wise decision to keep the peg or not. I overall think it was a wise decision, but I'm sure that this will remain a controversial issue. But anyway, this were decisions of the past, and as you rightly asked, what is the question? What is now the main challenges for the future? Now, let me just say a couple of words. I mean, the first point I would like to make is I wouldn't worry about inflation. Mario Draghi has said that he takes his price stability mandate very seriously. Now, I personally come from a Bundesbank background, so I used to work for the Bundesbank, and in fact, I can tell the audience here that inflation in Germany since the introduction of the euro has been lower than the inflation in the entire period of the Deutschmark. So certainly the euro has had less inflation in Germany than than the Deutschmark before. So certainly the stability orientation is very much there. I would rather at the moment be worried at the Eurozone level that inflation is far too low with 0.4% of inflation in August of this year. We actually have a risk of a much different risk, which is too little inflation, and that's very dangerous for financial stability and social cohesion in the monetary union. Now, for Lithuania specifically, I guess the big question is how much capital inflows will we get? As you also said, Mahmood, we will have cheaper borrowing rates in this country, and the question is, will there be a lot of borrowing, as we have seen in some of the countries that acceded to the euro, that experienced a strong interest rate shock. Now, I'm a little bit less worried, to be honest, than I mean, I don't think we will repeat similar kind of bubbles as we have seen in some countries of Southern Europe. And I guess one reason is that the policy system here is very aware of this. I mean, we heard the governor say today, self-discipline is key for success. I mean, I took now down this quote, which is a quite strong statement, and I think this is really quite important. I mean, you have to be from the beginning quite vigilant that capital inflows are well managed and that they don't become too big for the economy, and that the economy is not overheating. So that's something you certainly want to look at.
Thank you. I think we will return to this when we touch upon the broader state and perspective of the Eurozone. But before that, I would like to ask Mr. Keane, as a representative of business community coming from, I would say, rather internationalized business, and having already almost 4 years, if I'm correct, of experience here in Lithuania. What would you say about the importance of Lithuania's membership in the Eurozone for Western Union, for example, and in more general for foreign investors who are operating here in Lithuania and other Baltic states?
Thank you for your question, Chairman. Can I echo the comments of my predecessors and also extend my congratulations on achieving this milestone event in your economic evolution. It's certainly no easy task to arrive here. It's also may I also add, it's a great honour for me as a representative of the private sector to be asked to speak today. Western Union is a leader in the provision of global payment services. We operate in more than 200 countries and territories across the globe and trade in more than 120 currencies with approximately 500,000 agent locations. We have operated in Europe since the 1980s, and more recently have operated our money transfer business in Europe through a payment institution license which is authorized in Ireland. It's interesting, if I look back for a moment before answering your question directly, in 2010 we made a fundamental strategic decision to consolidate our various technology platforms and compliance operations together. And we went on the lookout for the ideal location for this centre of excellence, and we found it here in Lithuania. You have a competent, committed and very capable workforce, so you have a very large talent pool, and it's underpinned by a palpable sense of energy and enthusiasm. So we are very happy with our initial decision. Of course, you also have a very stable political climate and professional investment climate. I think nothing speaks more about our experience here in Lithuania than the investment we have made to date. In July 2010, when I came here first to interview the first tranche of employees, our initial plan saw us hiring 200 people. Today we are at 1,100 employees with plans to expand further. Indeed, the biggest challenge we have now is lack of space in the offices, and so if with the benefit of hindsight I could do something differently, we probably wouldn't have started in such a small office space in the first place, because we are now faced with the right kind of growing problem, which is expansion and how to accommodate that. I think to come back to your question directly, I think there will be no appreciable direct impact of the euro on our operations here. Although it does really provide, I think, the validation of Lithuania's reliability for its partners, both from a public and a private sector, and I think endorses our decision back in 2009 to choose to locate ourselves here. If I would turn back to Ireland's experience when the euro was introduced, I would expect that the introduction of the euro will certainly trigger further foreign direct investment flows into Lithuania. Certainly, if Ireland's experience is anything to go by, I'm pretty sure you will experience the same dynamic here. Of course, I hope that means none of our employees now are going to start to apply for positions with other firms that choose to locate here. But it is my belief that the introduction of the euro will further stabilise the Lithuanian economy. I know from the perspective of international companies seeking to invest in Europe that the euro further limits risks for them, and I think can only make you more attractive.
And you are not worried about labor force becoming more expensive after joining the Eurozone?
No. I guess my bigger concern on labor force is that with an increasing level of foreign direct investment, our existing employee base will be enticed away from Western Union. So it's attrition risk to my business is what I'm particularly concerned about. You know, I should say that foreign companies don't invest exclusively on the basis of a low cost of labor. I mean, that is for sure a consideration. It's an important consideration, but it's not the only consideration. What they look for is a dynamic and ambitious people. They look for well-educated individuals who possess cultural diversity, strong language skills. If I look at, I'm just looking at some numbers here in front of me in relation to our employee base in Lithuania. We have 28 languages spoken. Over 96% of our employees have a university degree, which is, I mean, these are strong numbers by any measure, with an average age of 29, which makes me feel a little on the old side, I must say. But it's not, I mean, I guess it is a risk that it could become more expensive to do business here, but we have strong local linkage, and we look forward to expanding that linkage. We are expanding that linkage. We currently have open positions, and I do expect that there will be further growth.
Okay, thank you. Are there any questions from the audience to the members of panel? Yes, please, could we have a microphone there? Please introduce yourself, and if it's directed to particular speaker, please indicate to whom.
Responsible also for economic surveys for Estonia and also the accession review for Latvia. Now the question that I have concerns let's say the expected or hoped for positive effect of euro introduction in Lithuania from the real side of the economy, so the boost of economic growth and investment and so on. Now the tradition in all the Baltic states in, let's say, the run-up to the crisis was one of more focus in expansion of financials and the services industry in general. In the meantime, there is a renewed emphasis in the European Union on more developing competitiveness in manufacturing and so on. So my question to the panel as a whole would be, what should be the accompanying structural reform priorities in order to maximize the positive impact of euro introduction in Lithuania, but maybe also in the other Baltic states, on the real economy, in particular manufacturing, and within that, foreign direct investment in manufacturing.
Thank you. Would you like to respond, Mr. Pradhan?
Thank you. Yeah. I think my answer would be general for the Baltic countries, but particularly for Lithuania. I would sort of say there are three issues here. One is something that was already touched on this morning, that unemployment levels are still reasonably high, and you need a few more sort of active labor market policies. John Dye has already touched on the kind of skill level and labor force. I think it's more kind of how to sort of deal with the remnants, meaning those people who, are not in the fortunate situation of John's employees. Active labor market policies to reduce unemployment, I think, would be one. Two would be that, as the governor mentioned earlier, with Lithuania's accession to the euro, the Baltic region now represents a sizable economic entity, if you will. But I think what it lacks is a sufficient integration of infrastructure within this region, which would actually improve the competitiveness of all three countries in this region and make it an attractive place for, as you put it, like, a boost to the real side rather than the financial services as a benefit of euro area membership. Thank you.
Mr. Rimšēvičs, would you like to respond?
Well, I think it's easy to make this conference into the European structural reform discussion. I think one thing is to say to ease the labor market, one thing is to do the infrastructure, but the thing is really that Lithuania, Estonia, and Latvia are very competitive markets and are having very balanced wage productivity situation, and I think this is one of the most important prerequisites in order to secure the future growth. But I think for the Europe as a whole, I think needless to say that when you ask what kind of structural reforms, I think you could do any structural reform, absolutely. Just start finally and do them instead of just talking about them and getting more money and increasing or not decreasing your budget deficit and increasing your outstanding public debt. So this is the most important thing, and I think maybe it was not communicated so explicitly this morning, but Latvia has developed two outstanding wordings. First one is less is more. Another one is expansionary consolidation. Think about it, expansionary consolidation, yeah? So basically, this is the thing that guarding the fiscal discipline, guarding the whole process, that this is not getting, after the crisis, not getting out of hand, is absolutely the most important thing. The more disciplined these countries will be, the more growth, the more jobs will be created here in this country.
Thank you, Mr. Governor, especially for the point about less talk and more work. I think it was Mr. Juncker who is now to become, who is already a president of the new president of the European Commission, who said about structural reforms, we all know what to do, we just don't know how to get re-elected after we have done this. So I guess that's part of the answer why there is more talk than work on structural reforms. But Mr. Wolf, I noticed, also would like to respond. Yes, please.
I just would like to emphasize the importance of getting the regulation and supervision of the financial system right, also for the non-financial system. I mean, the experience we've had is that some small economies in the Eurozone with low taxes have been very attractive for the financial system, and the financial system has expanded much more significantly than one would expect otherwise. And also, of course, this would have weighed on the non-financial system, so on the manufacturing sector and so on, including via wage mechanisms and so on. So I really think the key will be from the beginning to look quite closely and quite attentively at the banking system, to ensure that the transition to the single supervisory mechanism really works well, which is going to be an interesting challenge because, as you know, many of the mother companies or the mother companies of the local banks here are outside of the Eurozone. So that is going to be an interesting constellation where the supervision will actually be done from Frankfurt for the three biggest banks. But some of the owners of these banks are actually outside of the Eurozone. So that's quite an interesting constellation. And I would certainly think that looking at financial system development is also key for the entire development of the non-financial system. Let me stop here.
Thank you. Mr. Kin, would you like to react?
Thank you. Maybe I would just add, I think it goes without saying that a vibrant ongoing infrastructure program is an essential component. An investment in education always provides a superior return, and I think it also goes without saying that continued investment to elevate the status and knowledge in the economy always pays dividends. I would also maybe mention that other mechanisms I think could and should include what I would loosely describe as a social partnership, which is characterized by a very inclusive and constructive dialogue with social partners and unions, for example, to ensure that everybody is on the same page, so to speak, and that they're adhering to a principle of together we aspire and together we will achieve. Certainly, from the perspective of foreign direct investment, I think it's important that any potential investor has confidence and they look to these kind of indicators as those measures of confidence. In relation to regulation, I would say what's required is discipline, focus and oversight underpinned by strong governance mechanisms. I think that applies in equal measure to every state, but I think it's always worth restating. And indeed Ireland has some experience of that and finds itself back in a position now where that mantra of discipline, focus and oversight is needed. And so I would say don't find yourself in a position where you take your eye off the ball. and you then have to go back and repair mechanisms in that regard.
Thank you. Let me broaden the object of our discussion from the Baltic states' competitiveness of Baltic economies into the whole Eurozone. Mr. Pradhan, what's the IMF assessment of the current most pressing things to be done in the Eurozone? We know that IMF itself went through some kind of soul-searching exercise in recent years in the context of this whole debate in terms of austerity and economic growth, sometimes very misguided, I think, debate opposing these two things. So what's the assessment of the current state of the Eurozone and the most important things to do?
Thank you. I'll talk a little bit about our latest Euro area Article 4, which I kind of am responsible for, which we released in July. Our assessment of the Euro area, I'd say to begin with, clearly a very strong concern that the recovery in the Euro area is very weak and very fragile. Investment and output still in the Euro area well below pre-crisis levels. Secondly, and Guntram has already touched on this, a very strong concern from many quarters, including ourselves, about very low inflation in the Euro area, which makes it very difficult to adjust from very high debt burdens, both in the public and the private sectors, across many countries in the Euro area. So that's the kind of setting. What we think it calls for is a continued, very active or proactive central bank, the ECB. We're very supportive of the measures that they have already taken. Again, very comforted by the fact, including this morning when the President Draghi emphasized that they're very committed to the price stability mandate. This is something they pay a lot of attention to, i.e. the objective of putting inflation on a higher trajectory, and their willingness, as emphasized by himself and many other ECB board members recently, that if necessary they're willing to do more. I think this may well be necessary. It's very important that a central bank is seen to be achieving its objective, of making every effort to meet its objective. There are some in many quarters in Europe who express concern about financial stability risks, about possible asset price appreciation risks. Right now, we don't see these asset price appreciations or overvalued assets. Maybe there are some small pockets somewhere in Europe, but across general asset classes, we don't see them. And we actually think the risk of deflation is something to take more seriously than the risks of asset price increases. We would like to see more risk-taking, if you will, across the euro area and economies. So one is what's necessary to keep supporting demand. I will come back to the point you make on the austerity debate. On fiscal policy, we would strongly urge countries that have fiscal space to use it. The fiscal stance across the euro area is broadly neutral. So it's no longer contractionary, and that's this year. Some countries that have space should use it, and countries should go slightly slower where they can, where they have the space, ability to go slower in the pace of consolidation. This is, of course, all within the rules of the European Fiscal Governance Framework. I'm talking about the SGP, the Stability and Growth Framework. Then kind of some very encouraging progress in Europe on building a stronger architecture. Again, something that has been touched on this morning, the banking union. I think we're very encouraged with the progress on that. we think the single supervisory mechanism that comes into force later this year in November will begin a very important process of liquidity movements or liquidity transfers across countries, and will be a very, very powerful mechanism, institutional mechanism, to reduce financial fragmentation. What we have seen for quite a few years now in this crisis, that borrowing costs across the euro area vary very starkly, and this is something that is not consistent with a common currency or a single currency, meaning a single monetary policy. So the banking union that is being built and is well underway, I think, is the single supervisory mechanism is a very encouraging start. But clearly we, like many Europeans, we would fully concur that to address an underlying growth challenge, it's not enough to just rely on a central bank to fix the problem, or the fiscal authorities. Underlying challenge is clearly a lot more structural reforms, again, something we've already touched on, difficulties of doing it, etc. But in addition to labor markets and product markets, and we would emphasize here, there's a lot more space in product markets to reforms in product markets. It's not just about labor markets. In addition, we also think that Europe needs to think very hard about building a more diversified capital market. One of the lessons of this crisis has been that Europe has been too reliant on the banking system, and that when the banks are under stress, this has compromised the ability of the real sector. We heard this morning, the SME sector, how important it is in creating employment and growth, to access finance. So further capital market diversification, developing new institutions, new instruments to provide finance directly outside of the banking system, I think that's a very important challenge for Europe. So let me finish off by two remarks. One is that while we have listed some challenges and some issues, there is a lot of progress underway. And I think one should remember how much Europe has changed in a very, very short space of time. The euro area has built a lot of institutions, the ESM, the banking union, in the middle of a crisis, some of these things, like for example, the banking union, is a very, very complex construct. It's never been tried anywhere before. So I think we should recognize how difficult these things are, and how much, in that context, judge the progress, which, as I say, has been quite rapid. On a final remark, and this is about the austerity issue. Clearly, many member states in the euro area were very challenged by the very, very high costs of borrowing, the very high levels of debt that somehow ended up in one way or another on the public sector's balance sheet. And there was a period when there wasn't much choice but to have fiscal consolidation to try and reduce these debt burdens. But together we're now in a different situation, together with the ECB's actions, the ESM, some consolidation efforts. It is sometimes slightly false to just depict the European fiscal stance as something that we can describe as austerity or austere. As I say, the stance is broadly neutral right now. It is not that there's a false kind of debate, is it austerity or growth, and which one should we pick? I don't think I think that debate is somewhat simplistic. Thank you.
Thank you. Just one follow-up question. Every economist is familiar with optimum currency area theory. What would you say about Eurozone? Is it more similar to being optimum currency area now than it was when Euro was being created, when Maastricht Treaty was adopted, or it's not? I know it's a very broad question, but conceptually speaking.
Yeah, I think Europe has demonstrated the answer, which it's well, yeah, and in a good way, I think. I mean, The stresses that Europe faced, Guntram has touched on this: capital flows, excessive capital flows, lack of sort of adequate safeguards against financial sector risks building up, imbalances, etc. Meaning the issues that we found tested the euro area are not really to do with optimum currency issues. It's not because the euro area was somehow not an optimum currency area that we faced these problems. Right? These problems came from somewhere else. Okay? I would say yes, euro area is more of an optimum currency area than before. But I think that the couple of issues I touched on, what would really help consolidate the euro area to become a more resilient bloc would be a stronger architecture. And here, I think the banking union is one of those elements of the architecture. We haven't touched on another, which is more fiscal integration, the more fiscal union within the euro area. That would help make it a stronger currency bloc.
Yes, I would like to continue asking some more questions to Mr. Wolf. What would you say is the current banking union the final step, since we see very little appetite among policymakers to move further? And this is understandable, taking into account rather negative popular opinion in many Eurozone countries. You know, we see elections into the European Parliament this year. A lot of debates about rise of Eurosceptic parties in such a political context. It's of course very dangerous even to debate going further than European stability mechanism and creating some kind of asymmetric shock absorber Eurozone budget with Eurozone finance minister's position. So do you think that we are now kind of at the stage of exhausting this debate on institutional reform, or will it continue according to the plans which were proposed by the European Commission and Mr. Van Rompuy, you know, these economic, banking, fiscal and political union in the end?
Well, thank you for this easy question. I mean, let me start perhaps by the OCA argument you made and the adjustment that we are seeing. I mean, certainly I would argue that we do not have enough adjustment mechanisms in the monetary union currently. Labor mobility is not large enough. Financial integration is not large enough to provide really risk sharing across borders. Fiscal risk sharing is more than we had 4 years ago, but it's still very limited. So overall, I think the OCA theory would tell you we are really not where we should be currently. And the notion, and let me say that here also in Lithuania, the notion that we will be able to do the adjustment that is still necessary in the Eurozone according to the Lithuanian or Baltic model, I think is wishful thinking. I mean, we will not be able to achieve the same kind of internal devaluation.
You mean labor market flexibility?
Basically, massive internal devaluation, asymmetric internal devaluation. I mean, you mentioned the polls and the rise of populism and so on. I think we will hit a wall. I think it's not going to be possible to do it purely like this. So indeed, I do think we need to think about more mechanisms to help ease that kind of adjustment. And certainly, as you also say, the appetite for this is very limited in many quarters, and understandably so, because what we are talking about is not just potential resources, but we are really also talking about sovereignty. We are talking about. I testified. I was actually the day before yesterday in Berlin and was speaking to MPs, and I told them, look, I mean, yes, we all know we want a fiscal union. I mean, that's what the IMF, that's what international institutions, that's what academics tell us. But you know what that means? It means that you, as the German parliamentarian, you will have less powers on tax revenues. So some of the tax revenues you will have to, tax revenue powers you will have to share with the European level. So, so this is not an easy step, it's a big step, and perhaps breaking that down a bit more specifically on the banking union, I think we have achieved quite a lot on the banking union. I'm actually quite positive, very positive actually, on the single supervisory mechanism, where I really think we have managed to create a strong mechanism with a strong, let's say, federalization, centralization of the decision-making process also. So I'm quite confident that there we have achieved something. But of course, on the side where it becomes relevant for the taxpayers, we have found so far only partial solutions. These solutions are essentially relying on bail-in, which I think is a very good step, and on some risk sharing through a single resolution fund, which will be sufficient for individual banking crisis, but not for systemic crisis. And so whenever we have a systemic crisis, we will have to think about what to do we will have to agree again about, you know, how to share the burden. And this is a very burdensome political process. And I think given the current setup, there's no way we can do an ex-ante agreement on this. I mean, this would require some form of political union. So overall, I do think we need to go this next step. It's not an easy step, but it would be a step that would certainly make monetary union more union, and it would certainly also be a step that would help us achieve the kind of things we need to see still in Italy and France, where we need the adjustments still ongoing, but thinking we will just, you know, get it from those two countries without any coordination, without any common effort to boost GDP. I see this as a very, very difficult prospect to achieve.
Thank you for mentioning one important point, which I think is often missing when we listen to Mr. Mario Draghi or some other representatives of European Union institutions when they point to the Baltic states as examples to be followed in terms of undertaking internal adjustment. It's obviously not so easy in other European countries, as we see in particular in Greece. What was popular reaction to much milder measures that were undertaken in these countries compared to the Baltic states. So, of course, political and institutional conditions, popular acceptance are extremely important. Talking about institutions, I have a question to Governor Rimšēvičs. One of the arguments for joining the Eurozone is the importance of having a seat at the table where decisions are being made. What's your experience so far after Latvia joined the Eurozone? How would you describe this argument? Is it really important? Is the voice of Latvia being heard among 18 members of the monetary union, or is it overstated?
Part of the decision-making process, and you could influence everything. I think part of the membership is that you are in the club. And I could assure you that you could see many European politicians fighting, arguing, discussing the things. European Central Bank, Euro system, is much consolidated team, much more united and much more forward-looking. I would say that decision-making in European Central Bank depends on every individual, and it doesn't matter where you're coming from, as long as you could make very solid and good point. And this is not just the biggest countries are influencing everything, and smallest are just wasting their time.
Thank you. I would like to offer another opportunity for the audience. Yes, we have several questions. Gentleman in the middle, and then we have 2 questions here. But first of all, yes, please introduce yourself, and if it's directed to particular member of panel, please indicate to whom.
Franz Nauschnick, Austrian Central Bank. Perhaps success of euro, for example, Austria and Switzerland, we have different experiences. Austria joining European Economic Area, EU, Euro, whereas Switzerland did not, and we have done better than the Swiss. So from this experience, hopefully also Lithuania will do better than not joining. A second thing, you mentioned infrastructure. Don't think only of the Baltics. We in Austria, we are just building now already the tunnels in the Alps to reconstruct the old Amber Road. So you should be connected not only to the Baltics, you should be connected also to Central Europe. And for example, perhaps you can use what we did. We used the flexibility of the Stability and Growth Pact, and the financing is done by state guarantees, and it's repaid by user fees, so over the lifetime of the investment. And this works very well and has proved quite good. Thank you.
Thank you. I would suggest, well, this was a general remark, so I would suggest to collect the other questions, and then panelists will respond to them. Yes, here. Please introduce yourself.
I am a representative of Vilniaus University, and I am teaching monetary policy for master degree students. So it is very interesting, and I am very thankful for such possibility to participate here at that conference. My question may be also very common, but I think that if we have lived all of these more than 20 years, approximately always exclusive 1 year of monetary policy from 1993 to 1994. We have had monetary policy in Lithuania, can you imagine? And we were very independent. And our inflation was going lower and lower very fast. And it was maybe also the problem. And my question in regard of currency board and hard peg regime, what do you think? If we lived in under such strong regime all this time, we look at euro and monetary policy like a big possibility, a lot of possibilities for monetary policy. And all authorities tell for us that a lot of possibilities in regard of monetary policy, competitiveness, and also maybe more export, maybe less, a little bit import, and maybe will we change a little bit structure of our economy? What do you think about such issue?
Thank you. I would sum up this question as a question of having arrangement like currency board as the preparation ground for joining the monetary union, which is quite different from most other European Union countries when they created the single currency. For them, joining the EMU restricted discretion of monetary policy. In the case of the Baltic states, it seems that somewhat opposite trend has happened. Plus, we have Poland, which we see as not really seriously thinking about joining the Eurozone at the moment, and part of the answer is in its monetary regime and flexible exchange rate. But yes, I saw there was one more gentleman who would like to pose a question, and then we'll respond.
Thank you, Chairman. First of all, I would like to thank panelists for touching upon the issue on banking union. As I am now responsible and working in this area, I am chairman of the Association of Lithuanian Banks. I have a question to Ilmārs Rimšēvičs. Lithuania will join actually two infrastructures at the same point, to the Euro area, and also became the member of the banking union. Latvia will join 2 months earlier to banking union. Taking into account quite comprehensive and different regulatory environment coming for our institutions, because our institutions is coming from Nordic countries, which are some part of the Eurozone, part of the European area, part of the European Union. It's quite complicated regulatory environment. What is your views? How will it will affect banking models and provision of the financial services? And the second question, you just, Ilmārs, mentioned our common goal of integration for 25 years, but looking from the historical point of view, now I see that so many different rules emerged in the Baltic countries. Insolvency regimes, consumer protection, different attitude of the supervisors, and so on and so on. It creates some unnecessary obstacles for the financial sector. Don't you see that authorities should put more efforts for harmonizing these obstacles and harmonizing these rules for the financial sector?
Thank you. This was mostly directed to Mr. Rimšēvičs, but I saw there was one lady. Let's give a chance for the last questions further in the back. Please introduce yourself.
Good day to everyone and to the panelists. I represent American Chamber of Commerce, and I would like to hear views of Mr. Pradhan and Mr. Keen, probably on more general things. That is, what are your views on Eurozone dynamics and its global competitiveness? Because we know that at the end we all depend on our global competitiveness, especially such small economies as Lithuania, and our ability to attract FDI. So what are dynamics in regards to United States and also all the other emerging markets? Thank you.
That's quite a lot. So let's start with Mr. Pradhan. If you have some comments on these questions, please.
Okay. On the first question, which is Lithuania has lived under a fixed exchange rate for a very long time, my answer, I think I touched on it, my answer would be a general one, which is that we do not think that any particular monetary policy regime, a currency board, a peg, is necessarily appropriate for every country. Okay? There are countries that are able, and Guntram touched on this, able and maybe have better records of doing adjustments when necessary through internal devaluations, other mechanisms. There are other countries who are not able to do that. Lithuania has demonstrated that, and other Baltic countries demonstrate they can live with that regime and follow the necessary internal adjustment as and when required. I thought the other question you were asking was, can monetary policy change the structure of an economy. And I think this is a very good question. Obviously, in the short term, no, but in the long term, maybe through a kind of particular regime, the economy adapts to that regime. And that structural feature might be the adjustment capability. But as I say, it's very difficult to generalize, and you touched on Poland. It's very difficult for me to say this is something that every economy could live with. Clearly, there are cases where internal devaluation, Portugal, for example, which has been quite difficult. It's not easy. On the second, do you want me to go through all the questions? Okay, thank you. On the second question, I think, which was directed elsewhere, but I just touch on, one would expect that the banking union, and in particular the single supervision, okay, will have quite a strong impact on the ability of banks to move liquidity within the euro area from where the banks have, say, excess liquidity to where liquidity is needed, meaning they can actually reduce their cost of funding. Because right now, banks cannot move this liquidity around. And therefore, in some jurisdictions, some member states, their borrowing rates are much higher because their deposit rates or wholesale funding, where all their liabilities cost more. Many banks have the ability to have surplus liquidity in some parts of the euro area, Belgium, Germany, etc., where they have very low funding costs, very low deposit costs of raising deposits. This is the spirit of a single currency, and this money should be allowed to move. I think that would be one major impact on banks, being able to move liquidity, and therefore a more harmonized funding costs, a more harmonized borrowing funding costs, and therefore more harmonized lending rates across the euro area. One would hope that that's the impact. On the last question on the Eurozone dynamics and global competitiveness, this is a very broad area question. Let me just make two observations. The Eurozone as a whole has a current account surplus. The Eurozone as a whole does not suffer a competitiveness problem or a competitive issue vis-à-vis the rest of the world right now. I could go on. The Eurozone as a whole does not look over-indebted compared to many other parts of the world. I mean, the, say, comparable parts of the world, the advanced countries. What is interesting, though, and this is maybe not quite addressing the point you had, is if you look at the last 10, 15 years of European Monetary Union, and if you ask the question, where does European foreign direct investment go to? What is actually quite interesting is if you look at German FDI outflows, where does Northern Europe invest money in? It's primarily been towards the east, in Eastern Europe, not in Southern Europe, not in the stressed economies, not in Italy, Spain, Portugal, etc. Right? Now there is clearly a kind of dynamic going on which is to do with these economies are not sufficiently competitive when you compare the opportunities that are offered to large corporations in Eastern Europe. I'm thinking here of German automobile producers, etc., etc. Right? I think that's an interesting dynamic that Europe, or maybe the EU as a whole, needs to look at more closely. Thank you. I'll stop there.
Thank you. Governor Rimšēvičs.
Well, speaking about the Lithuania's currency board and teaching the monetary policy without real monetary policy, I would say the answer is very simple, that pegging the currency is the monetary policy. It is absolutely the cornerstone of everything what the country does. And I think the founding fathers of the currency board, that's why I have stressed that the currency board alone cannot function if the fiscal policy is not underpinning the policies. And I think, as Mahmood already mentioned, that one size doesn't fit all. for the small open economies like the Baltic states, currency board is the best monetary policy what you could have. Because it's really, you're having so much exports, you have so many imports, and it's very important that enterprises could really rely on that given exchange rate. Because otherwise there has been already many, many examples that the big banks, big players, they move the exchange rate, they basically screw up the market, and businesses are deterring or postponing their decisions. So therefore, I think the three Baltic states are very, very ready to be in the Eurozone, because there is already, if you will, there is I wouldn't say fixed exchange rate, but there's nothing that you could play around with exchange rate. And that speaking about the allegations that we are having the wishful thinking that Baltic states will not be able to affect, if it's necessary, to do the internal devaluation once again, I think, yes, we will. I mean, going throughout this crisis and experienced, seeing what it means, the loss of competitiveness, and if that will be necessary, I think three Baltic states clearly know the recipe and are committed to preserve the competitiveness, whatever it takes. Speaking about SSM, I think you should not worry. I think the European Central Bank from November 3 or November 3rd will be taking over these responsibilities, and for the Baltic commercial banks, there shouldn't be any worries, because I think the banks in this region have been not only supervised much better, but also the structure of the banking system is much more different, and especially in Estonia and Lithuania, I think more than 90% is owned by the foreign capital, by our Scandinavian friends. So speaking about the regulations which have emerged during the last 20 or 25 years, well, these are the structural reforms I have been alluding a couple of minutes ago, that this is absolutely up to us, up to the regulator, up to the country, men and women, to take these hurdles away, to make the banks more susceptible to lend. I think when you look at the Baltic picture, I think the lending in Lithuania has been outstanding. So there is still deleveraging taking place in Latvia and also a little bit in Estonia, but in Lithuania the growth in new lending has been going up, and I think that's a good sign that things are not so bad. Banks are willing to lend. And last point on this, but not least, is that there is a lot of discussion about European Central Bank and TLTROs and how much money you could squeeze into the system. And I think example of Lithuania is one which shows that if the fiscal policy or the public finances are in order, banks are not kept under the stress. What will happen with the taxes? That will mean a new environment? Will that mean the new rules? And should we probably wait? No. In Lithuania, everything has been settled. Everything is pretty clear, and banks having no risks and any uncertainty which precludes them from lending. Well, this is also then goes for the dynamics of European economy. It is very important that Europe, once and for all, understands what kind of medicine it needs. European Central Bank has done, I think, just everything what it could. Lower interest rates, announced long-term lending. When I went to school, the longest term you could probably dream about is 90 days. also at a penalty rate. Now you have 4 years, 0.15, 400 billion available. So we're already seeing that there is not such a big demand for that. Banks are already having a lot of cash, a lot of money. They could lend already today. The reason they're lending, because the fiscal house is not in order. And I would say that this is exactly because of the many European countries having the quite high levels of indebtedness. The banks don't know what is going to be new fiscal rules, new fiscal exercise, and they prefer to wait. Let's hope that after all the AQR, all the stress test exercise is over, the certainty among the banks themselves will increase, but I don't think that this is the only prerequisite for European credit markets to resume to growth.
Thank you. Mr. Wu, would you respond to these questions?
Yes, I mean, let me just add, because I agree with much of what has been said, let me just add on the currency board. I concur that the currency board, of course, was the right decision, and the Baltic countries have shown that they can adapt to this. Now, why am I skeptical about this being a good role model for some countries in Southern Europe? Well, basically, because if I look at the last 15 years, so since the beginning of the euro, I see that, just to take one statistic, that the nominal compensation per employee in Italy has grown by 37%, and in Germany it has grown by 17%. And if you think about productivity, if we are lucky, productivity growth has been the same in the two countries, but probably it hasn't been the same. So we come up with a situation where we have a very, very significant divergence over a very, very long time, and correcting that is going to be very, very difficult, and correcting it in an asymmetric way, I think will be extremely difficult. Now, let me just add one point on the banking system and banking union. Mahmood mentioned the liquidity and the ring fencing. This will end with the SSM, so the SSM will stop practices that existed up to now by national supervisors to actually keep liquidity in the bank in which the bank is located, instead of using that liquidity for a branch or a subsidiary in another country. This will stop, and that's a big, big change, and I think it's a very good change. Perhaps the more important change in the medium to long run is the impact of the banking union on the structure of the banking system, and on the question, who's going to own which banks? What kind of bank mergers are we seeing? Will we see more cross-border mergers or not? We've looked at the statistics up to the beginning, up to very recently. Bank mergers were predominantly done within countries. So banks within the same country would merge. And the idea of banking union is, of course, that you will see banks merging across borders and getting more and more diversified balance sheets. I mean, also on the asset side, so that banks are not just exposed to debtors in their own country, but really hold assets from a wide range of countries across the union. If you achieve that, and I think this is not a process that takes 1 year, it's a process that will take several years, perhaps decades. If we achieve that, then we will really get the kind of financial stability coming from the banking system that we really need. I think this is absolutely crucial, and that's the key variable I would look at for kind of the success of banking union in the next 5 to 10 years. And I think we should really think of this as a kind of a long-term process. And let me end here. Thank you.
Thank you, Mr. Keane.
So if I could offer a private sector view, I guess it never ceases to amaze me how people look at the same set of facts and draw entirely different conclusions. You know, the glass is either half empty or half full, depending on your perspective. For the reasons Mahmood outlined, I would entirely concur with his view that the fundamentals of Europe remain sound. We aren't without our challenges, but I guess everybody has a set of problems and challenges to deal with. We know what they are. We have a plan to address them. I think Europe remains attractive from the foreign direct investment perspective. Some countries more attractive than others, but be that as it may, as a whole, I think we represent an attractive investment proposition. In terms of the regulatory regulation and banking union, I would underscore the points made by previous speakers in that it is still quite a heterogeneous environment, and so harmonization is important. It's certainly important to Western Union for the type of business that we are in, because we see it impacting, or rather, I would say that if there was greater harmonization in respect of some of the European directives, it would significantly enhance our effectiveness and competitiveness. So we would look forward to those changes coming. I guess, you know, it's also the case that it's always much easier to be a critic than an artist. We have the mechanisms, we have the policy. For sure, there is opportunity for corrective and perfective improvement. But I think it's understood what that is, and we just now need to start moving. You know, as a famous Irishman once said, there's only two kinds of failures: people who talk about it and never do it, and people who do it without talking about it first. And and I'm not suggesting by any means, sorry, let me just qualify that by saying I'm not suggesting that we necessarily fall into either category, but I think it's a risk we just need to be aware of. Foreign investment, or indeed investors of any persuasion, seek clarity and certainty. They're the two things they need today. So if we set out to do something, we must do it. We must have a plan, we must deliver on that plan. People want to see, investors want to see that level of clarity that exists. So that discipline, I think, which has been a theme that has run throughout a number of the discussions today, that discipline, focus and results are three things that we must not lose sight of. But fundamentally, I am European. I believe in Europe. I think we will weather the storm. We are weathering the storm. We will continue to sail through it. There may be some difficult times on the horizon, but you know, that's life. And so, yeah, I would be more optimistic than not, I must say.
I think that's quite a good way to conclude this whole discussion. I will just add one observation. When I was listening now to the panelists, I remembered my meeting with Commissioner Joaquin Almunia in April 2006. At the end of April 2006, it was just a few days before European Commission and ECB issued its opinion on Lithuania and that it's not ready to join the Eurozone in 2007. And it was in Miami, out of all places. There was a conference on the role of euro and dollar in global economy at Miami University. And I wanted to discuss outside the conference room the issue of Lithuania's readiness with Commissioner Almunia. And it was very clear that he was convinced that Lithuania was not ready. And in general, my feeling was that European Union institutions were very critical and very strict about Maastricht criteria at the time. When we look into the current time, situation is very different. I think all three Baltic states' membership in the Eurozone is, first of all, very good news for the Eurozone itself. Paradoxically, Lithuania was not admitted when it had impressive economic growth. Now, all three Baltic states joined the Eurozone as an essential element of exit from the crisis. Again, quite an interesting experience when some countries inside the Eurozone were discussing leaving it. So we have three Baltic states coming in. And as we heard here, Eurozone itself is a fast-moving target. A lot of things have evolved since the start of the crisis in 2009, 2010. And although Lithuanian currency was pegged to the euro since 2002, so we were already influenced directly by ECB's decisions, by what happened in the Eurozone. Now we will be influenced even more. So my conclusion is we should be even more carefully following what's happening not just in the EU, but in the Eurozone in particular. This is important for our citizens, it's important for our businesses, for policymakers, and I hope that this discussion contributed to our better understanding of what is at stake and what's on the agenda in the Eurozone. So please, before proceeding to the reception, thank all the panelists for an interesting discussion.